Hey guys, Max Norbury here, and this week everybody we're going to be talking about the top 5 Forex news events out there in the markets that are really driving that money around the charts. Now guys, first of all we're going to be looking at something called the unemployment rate. The unemployment rate is a metric that is used to measure, self-explanatory here, the unemployment rate of a particular country. Okay, now if the unemployment rate is either low or high, this is going to adversely affect that country's currency. So let's take the pound for example. If the pound has an unemployment rate that is lower than the previous month, that means more people are essentially employed, which means more people are earning money, which means there is more disposable income being spent in that country's economy. Okay, so for the pound in this example, that's going to be a good thing for the pound, which is going to likely drive the price of the pound slightly higher. Now let's take another example. If the pound's data comes out negative and the unemployment rate actually increases, this is suggesting that there are more people out of work than in work, which means there's less disposable income, which means there's reduced retail sales and therefore less money floating around the economy. Now this is going to be a pretty adverse thing to a country's economy and economic health in general, so therefore the price of the pound would likely decline as a result. Now, thinking about what we've got next, we've got things called GDP. Now, you may or may not have heard of this before. I'm pretty sure many of you have, whereas I'm pretty sure many of you haven't. GDP is actually stands for Gross Domestic Product, and GDP is basically the major measure of everything that's being spent in the country. GDP measures absolutely everything, right? So GDP is going to measure your clothes, your food, your motor industry market. It's just everything as a total. So if the GDP is declining, that means there's less money being spent in a country's economy, and therefore the economic strength of that country is actually declining. This is going to be pretty bad for that country. So again, you will see the price of the currency decline as a result. Whereas if it comes out positive, you'll probably see the price of that currency increase as a direct result of there being more spend in that country's economy. Now, here's something interesting. You can actually look at the currency flow between two currencies based purely on GDP. So if you look at the GDP over the course of the last 10 years of one country's currency, like the euro for example, or you look at the GDP for the pound, you can look at the euro pound over the past 10 years and you can almost marry up the GDP data for both of those countries' economies to the price movements that you're seeing on the longer term time frames. It's pretty interesting if you think about fundamental edge and trading economics. Now thirdly guys, we're going to be looking at something called CPI. CPI stands for Consumer Price Index. And the Consumer Price Index is a really big one because this is the measure of inflation. Inflation at the moment is a huge problem around the world. You guys might be up on the wires about the Fed and how many interest rate hikes they're going through at the moment. We're actually expecting another 75 basis point hike today. So I'd definitely be staying tuned for that later on this evening. But thinking about these interest rates and what they're there to use for, where interest rates are there to counteract the inflation. So if inflation is high, and the CPI index is measuring high, that's going to be a good thing for economic strength because that means the economy is on the upturn and we're actually seeing that trend to the upside with the economy. It's getting stronger, more people are spending. We've seen that in the GDP as well in the previous thing that we just covered. We're seeing that trend to the upside. So if the GDP increases, naturally we're going to see an increase in CPI, which is our Consumer Price Index. And when the inflation gets increased, that generally means that the economy is going through a strengthening process, a strengthening cycle. And then this is when you get central banks, which is a great segue into my next major point about interest rates. And interest rates are used to curb high inflation. So if we think about how these are all tying up to one another and how they flow from one to the other, we've got GDP boosting higher or declining CPI, which is then leading on to interest rate decisions made by central banks. Now, the central bank's major policy tool in being able to either increase that inflation or decrease that inflation and curb the high inflation, for example, that we're seeing at the moment, is by the tightening of monetary policy or the loosening of monetary policy. The easing is the word they use, right? Quantitative easing and quantitative tightening. Now, these terms you may or may not have heard quite a few times spread around the markets, but you may have never have understood what they meant. Quantitative tightening is generally the increasing of interest rates, and the reason banks do this is to bring inflation back down, because too high inflation and you're probably going to be running into a few economic problems in that particular country. Whereas if inflation is dropping too low, generally we see the easing of that so that the inflation remains in the targeted measures, the targeted margins, which every central bank has for the particular country under discussion. And then finally, we've got the big one, the one you must have all heard of, non-farm payroll, or the NFP, of which we hold a major event every single month. Now, the non-farm payroll event that we do is absolutely amazing and it's really exciting, etc., etc., but you might not actually understand what that number's telling you. Non-farm payroll is measuring the amount of jobs that have been added or removed from the economy in the previous month. So that's obviously a huge deal. If the non-farm payroll number comes out higher and it looks like we're seeing a trend to the upside, that means again more people are being employed, more people in work, more money being earned, more money being able to be spent, which means economic strength and a continuous growing economy. Whereas if we see that trend actually start to dip to the downside, that means generally jobs are being removed from the market, less people spending, less people earning, less people spending. Okay, which means generally it's going to run into a bit of a trouble if that continues too long. Okay, now those 5 fundamental factors, those 5 fundamental news events that take place in the Forex market primarily, actually affect different markets around the world as well. You have to think about the energy markets and what that means for them. You also have to think about the stock markets. If inflation is high, less people are likely to invest because it's more expensive to invest than it is to save their money. Put it in just a normal savings account, for example, right? But if the inflation is low and money becomes cheap to invest, then everybody wants to invest because it's so cheap to do so. This is how we measure strength and weakness in the US stock market, or any stock market for that matter. If you have an idea that inflation is actually going to be dropping down and going to be reducing, then you know that the stock market as a direct result could likely be long, and vice versa. If you're looking at an inflation rate increasing, then you could actually look at potentially the stock market's going to take a bit of a dive as a result, because people are going to be less likely to invest, and so investor sentiment declines, doesn't get stronger, it gets weaker. So I'm going to wrap this video up there. Hope there's been a couple of key takeaways for every single one of you this week. I do appreciate many of you already know everything there is to know about these economic news events, but if you don't, then this is definitely a good place to start. So guys, I hope you have an absolutely amazing rest of the week ahead and an excellent weekend as well up next. Remember, please hit the bell icon and the subscribe button. Notify you of any upcoming videos that are coming to the channel. We're looking to release a video every single week between me and my colleagues, and also to subscribe so you never miss out on the next and upcoming videos as well, and growing that subscriber list that we're working so hard to do. So guys, again, it's been an absolute pleasure being able to spend the time here today. I hope to see you inside our trading room soon enough. So take care, see you soon, and above all else, trade safe. I'll see you then.